everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti and I hope you all are doing good. So if you are also planning to clear your JAIIB in first and single attempt, then do watch this session. Because today I am going to talk about 5 most confusing topics from your AFM. So what you need to do, you need to watch this session till the end. But if you are visiting to this particular channel for the first time, do subscribe it, share this session with your friends and colleagues so that they can also understand some accounting and your finance terms. So let's start today's session without any delay. Okay, so first term which we are going to cover, that is your profit versus revenue. Yes, you can see these two terms similarly, but there is a huge difference between these two. I will tell you in just small lines, yes, some small keywords I will tell you so that you can retain this till your exam, and even you can use these terms in your banking. Yes, okay. So first is profit. Profit means what? Profit is your net earning after deducting all expenses. Yes, first you will talk about all your incomes, and when you subtract all your expenses in the amount when this income is greater, suppose 10,000, that is your profit. That is your profit. Yes. So when your incomes are greater than your expenses, that is your profit. Yes. If incomes are less than your expenses, that is your loss. But revenues, they are different. Revenue means total income generated from sales or services before deducting expenses. Means what? Suppose I am doing furniture business. Yes, and during this financial year 25-26, I sold furniture around rupees 10 lakhs. Yes, so this 10 lakhs is going to be my revenue. So revenue means equal to your sales. Yes, so sales, revenue, both are same. Yes, revenue means what? Total income generated with the help of your sales, or if you are doing any services as your main work before deducting any expenses. So that is your revenue. Yes, revenue is something in which you are doing business. Profits when you subtract expenses. So this is your profit versus revenue. Now, let's see second term, which is again confusing and very important for your accounts. That is your accrual versus cash accounting. Yes. So let's talk about easiest one first. Cash. Cash means when you are seeing there is a monetary flow. Okay. When there is a monetary flow. Flow can be any side. Inflow means coming amount in your business, or outflow, going from your business. Any flow you can see. That is your cash accounting. Yes. So cash accounting records revenues or even expenses only and only when cash is exchanged. When actual cash flow is there. Yes. When actual cash flow is there, that can be inflow, that can be outflow. Yes. You are purchasing asset or you are selling asset. Both the things, if there is a cash, you are going to record as per cash accounting. Only cash transactions are recorded. Yes. Now, let's see your accrual accounting. Accrual accounting means you are going to record revenues or even expenses when they are incurred, whether you receive cash or not. Means what? Suppose, let's see one example here. Purchased goods rupees 15,000 on credit. Yes, on credit means you purchase the goods but you didn't pay any amount. Yes, so that is what? Credit transaction. You will pay tomorrow, day after tomorrow, after 1 week, after 1 month. That is between you and your supplier. Okay, but remember this type of transactions, credit, you are going to record as per accrual accounting. Not only credit transactions, but you can record here cash transactions as well. Yes, suppose purchased goods rupees 15,000 through cash. You are going to record credit transaction as well as a cash transaction. But in case of cash accounting, if your business follows cash accounting, you are going to record only your cash transactions. Only cash transactions. Yes, only and only cash transactions. Only cash transaction. Yes, but in accrual accounting, we record credit as well as cash transactions. So remember, most of the businesses, we follow accrual accounting. Yes, for every business, we try to follow this accrual accounting. As soon as you transfer or you get the rewards or risk, you are going to record that transaction. That is what accrual accounting and cash accounting. Now, coming to your third type of term, which is again confusing, that is return on investment, return on equity. Now, what is the difference? Let's find it out. First is your ROI. Achha, ROI is your return on investment. Okay, and ROE is your return on equity. Now, ROI means, here we are talking about investment. Now, investment is going to be a total investment, because when we talk about any business, suppose here I start one business known as ABC company. Okay. This is my ABC company. Now, suppose for this company, I require 10 lakhs. Yes, I require this 10 lakhs. Now, how I can arrange this 10 lakhs? I can use my own saving. Yes, I can use my own saving, or I can give the ownership to my friends and I can take the funds from them, which is known as shares or equity, you can say here. Yes, I am selling equity of my business, shares or ownership of my business and getting the funds. Or next way is there that I can borrow. Yes, I can take bank loan. Yes, I can issue debentures. Yes, or I can issue bonds. So these are the two ways through which I can raise amount. Through equities, yes, or through debentures. Okay, so these are the two ways through which I can arrange this total amount. Yes, so this 10 lakhs is going to be my total investment. And how I arrange this total investment? From loan as well as from my savings. Okay, suppose from ownership, from this equity, I have taken around 4 lakh. And from the borrowing, here 6 lakhs. Yes, so I'm going to add both these sides. I'm going to add equities as well as loan amount. That is what total investment. So when we calculate ROI, ROI means your profit that you generated because of your total investment. Yes, so suppose I invested 10 lakhs total, and based on this 10 lakhs, I generated 2 lakhs. Yes, so that is what? That is going to be 2 lakhs. Yes, so that is going to be into 100 as well, because here we want return. So multiplied by 100, so this is 0, 0, 0, that is going to be your 20% ROI. Yes, ROI talks about both type of investments. But when we see ROE, that talks about only your equity. Yes, only equity. Profitability relative to shareholders' equity. Yes, here we are going to take only your 4 lakhs. Only your 4 lakhs, and based on this 4 lakhs, how much we generated. Yes, based on this 4 lakhs, how much we generated, we are going to take here and multiply with 100. That will give you ROE. Yes, this is the measurement of profitability relative to shareholders' equity, and ROI, that is return on equity. Return on equity means specifically you focusing on towards your equity side. But ROI means total investments that you are taking for your business. That is the difference between ROI and ROE. Okay. Coming to your next term, that is fixed cost versus variable cost. Yes. So fixed cost means that type of cost that do not change with the production or sales volume, for example, rent and salaries. Yes, whether you generate any goods, whether you produce any goods, that is not at all going to change your fixed cost. Fixed means they are going to remain constant. They are going to remain constant. Yes, constant. But variable cost, these type of costs that vary with the production or sales volume, materials, direct labors. Let's take one example. Yes, suppose in my company, I'm doing car manufacturing. Okay. So if I manufacture one car, yes, for one car, I require one engine. Yes, I want one engine. Okay. For 10 cars, can I use only one engine in 10 cars? No, I want 10 engines. Yes. Suppose now I'm manufacturing 100 cars. So can I use this 10 engines in 100 cars? No, I want 100 engines because that is going to be material, raw material for 100 cars. So when you are increasing, yes, your material as per your volume, this is your variable cost. Yes, this is your variable cost. Now, next side, when you were producing, you were paying rent equal to 1 lakh. Okay. Now, after that, when you increase your production, then also 1 lakh. Okay. After that, also when you increase your production, then also 1 lakh. When amount is constant, even after changing in your production, okay, that is your fixed cost. This is your fixed cost. If you are not producing any car, okay, no engines, why you are going to purchase any engine? So that is your variable cost. But when you are not producing any car also, you need to pay this 1 lakh. That is what fixed cost and variable cost. Okay, everyone. Now, let's see the last term. Depreciation, amortization. Yes, depreciation means this is the amount we are going to charge on our tangible assets over time because we are using it. And because of this depreciation, we are going to reduce our value of assets. Yes, because we are using it, we are, taking the benefit of those assets. So that will degrade over time. Okay? So that is what depreciation on tangible assets. Tangible assets like your building, yes, machine, etc. That is your tangible assets. And on tangibles, we charge depreciation over time. But next term we have amortization. This is again the reduction in the value of intangible assets like your patent, yes, trademarks. So these are your intangible assets. When you want to reduce their value because you are taking benefit, yes, so that is what amortization. On tangible assets, we charge depreciation. On intangibles, we charge amortization. And there is one more term in your AFM, that is loan amortization. Now, loan amortization means reduction of a loan balance over time. So make sure when you are reading the question, you are reading very carefully. They are asking depreciation, amortization or loan amortization. Loan amortization means again reduction of a loan over a period of time. Because you are going to repay principal, interest, so that will again reduce. So reduction of a loan balance over time. For that also, when you are preparing one table, that is your loan amortization. So these are the 5 most confusing terms. But after that also, if you find any terms which are confusing, yes, you can paste on our comment section. I will make more videos on that. So I hope today's session is very helpful for you. So do share your thoughts and watch again if you're finding it confusing, or anytime if you find confusing any terms, you can watch this session. So do like it. Now, after this, if you have any further query related to your JAIIB, you can call on this number, that is 09240 231030. Yes, and you can talk directly with the experts. This is our official number through which you can talk about JAIIB, how you can proceed now, which is the perfect batch for you. And one more information, that if you want to enroll in our crash course, okay, because now we started our crash course, and if you want to clear your JIB, you can join that. For that particular crash course, you can use this coupon code Y895. That is the coupon code which will give you maximum benefit. Yes, everyone. So this is about today's session. I hope you really like this session. Thank you everyone for joining. Take care and bye-bye.